Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Monday afternoon, we have Chris Dearborn, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100. Chris, it's great to see you as always. Welcome back to Trade Talks.
Thanks, Jill. Always a pleasure to be here. Thank you for having me on again.
All right, and a little bit of recovery that we're seeing within the index over the past number of trading sessions. And I really think what's interesting with this earnings season in particular, Chris, is over the past number of years, things seem to trade in tandem. The system was so flush with liquidity, and now that we're starting to see that dial back a bit, earnings really matter, and stock picking 101 really does matter. And we're seeing how companies are being rewarded or dinged based on their quarterly results and guidance.
We saw that firsthand last week. Obviously, all the focus for the last few weeks have been on the macro, right? You're talking about inflation, you're talking about rate hikes, unemployment. The Fed has been front focused here. The macro on the political sessions and items that are going on not only in DC, but on the broader scale with Ukraine, Russia, China. What's getting lost here is people forget that the Olympics are actually going on. It's really not making that much of a splash here. So luckily that doesn't impact the markets, but the inflation part and the geopolitical situation does. That left room for the earnings, like you said, to really sneak up on people. And what we saw last week was exactly that. Earnings for the mega caps do matter, and they can destroy an uptrend, or they can make a positive impact to the broader market. And that's what we've seen. And unfortunately, what a lot of items have here is that the valuations are stretched. We've talked about that before here. When a rising rate environment, the Fed's looking at 4 to 5 rate hikes over this year, looking to get to that 1.25 to 1.5 target rate of the Fed fund futures. And whether that comes in a 0.5 basis on the first round in March, which will be a shock to the market, or small increments of 0.25, which might be a little bit more gradual. We'll wait and see what happens. But again, the macro will come back in focus. We only have 9 Nasdaq-100 companies reporting this week. So the impact to the earnings, while significant, does not carry the same weighting as what we saw this last week.
And Chris, let's pull up your first chart here and take a look at fresh technical levels to watch in the Nasdaq-100.
So we're trying to reconstruct some positive attitude in the charts here. And we've just been decimated since the beginning of January. You've lost over 350 basis points. You destroyed all sorts of technical levels on the 50, 100, 200-day moving averages. The Fibonacci retracement levels were destroyed. And it tells you how quickly technicals can fade when you have uncertainty towards the broader market. And really, good technicals are made by good fundamentals. And when you don't have an idea on the fundamentals, especially on the Fed side on interest rates, which is the most important, impactful item on any equity, it's hard to kind of justify certain levels. That being said, we are condensing into a trading range here. And what's nice, if you look at the chart, is that it's clearly defined between 14,485 and 15,000. And that's the range that we're trying to consolidate here. As you take a look at the chart, we are below the 200-day moving average, but support's very tight. You got support here at the 14,600 level and the 14,485. What's interesting, the Nasdaq-100 has turned slightly positive today. Which is turning that candle a little bit green. We did open at 14,813. We're trading at about 14,700 right now. We need over 100 points to get above that to make a real bullish momentum into there. But I would settle for consolidation. And more importantly, if you look at the relative strength index at the bottom, we've turned from an oversold conditions, which we saw last week when the index dipped down to 1,400. We're at a 43 level. 43 is above oversold, but not significantly. So that means that there will be some more shorter term players here selling out of the positions they bought on the bottom feeding. Look for that to work its way through. Hopefully the macro plays itself out a little bit here. We have CPI on Thursday. That's going to be a big hit. But look for this to bounce between 14,485 and 15,000. To break above or below either level will be significant.
Right. And Chris, in the last minute here, let's take a look at the stocks that are adding to performance in the Nasdaq-100.
Right. The number of companies in positive territory are much higher than the companies that are negative. You've got 65 companies positive and 35 negative, but the negativity is in some of the mega cap names. Again, Meta, Alphabet, Microsoft, PayPal, all down significantly. Though, you have some stock specific news there impacting it away from earnings, whether it's lawsuits overseas in Europe or other items coming out of the EU. Positively, NVIDIA is having a wonderful day. Amazon's building on those gains from last week, all adding nicely. And then Apple doing very well, consolidating here at higher highs. Look for that stock to continue to move higher as well.
All right, Chris, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.